It'd be hard to argue that Warren Buffett is not the greatest investor of all time. I think we can all agree that he is. And one of the great things about this is that Warren Buffett is still alive today, with a portfolio bigger than ever. And because of financial regulations, he has to disclose his portfolio to the public, which means all of us investors get to look at how the greatest investing mind is investing in this day and age. With this video, I want to break everything down piece by piece and show you the exact stocks that Buffett owns to navigate these weird market conditions that we are in. Warren Buffett's largest position by far with his investing company Berkshire Hathaway is Apple. Apple makes up 47.8% of the entire stock portfolio, and he owns 944.3 million shares of the company. Altogether, that's worth $109 billion. That's a lot of money in one stock, even on Buffett's terms. Apple, I know you guys already know generally what the company does. We'll show you a bit deeper though. So the main thing that the company sells is obviously the iPhone, one of the most popular selling phones in all of history. That makes up 41% of their revenue. But they also sell the iMac and the iPad, which makes up 14 and 10.5% of the revenue respectively. Then of course you've got the slightly newer segment, which is the wearables and home accessories. That makes up 12.2%. And lastly, you've got the services side to their business. So that's things like iTunes, the App Store, Apple Music, Apple Pay, and all of that. This makes up 22.5% of revenue. So that gives you a bit of an idea of Apple, the company as a whole. Let's take a quick look at the stock now. So this is one of the biggest companies in the world. Right now it's valued over $2 trillion. That is big. The price of an individual stock, if you're looking to buy, is $123 a share, with earnings of $3.28. The stock has rallied very nicely over the past couple of years. It's gone from $24 in 2016 to over 5 times the amount today. I think it's a smart investment from Buffett. It's hard to argue that it's not. Apple has such a strong business model. People know it all around the world and they love their products. Let's just say I don't see Apple, of all companies, failing over the next 3 to 5 years. Moving on to his second largest position, that's Bank of America, one of the biggest banks in America. It makes up 10.6% of his entire stock portfolio, valued at over $24.3 billion. The ticker symbol for that stock, by the way, is BAC. So Bank of America, what do? They help with loans, banking services, investing, asset management, and other financial related roles. A very complicated business, but Buffett knows them well. Price-wise, they're affordable to pretty much any investor, unless you're broke. They sell for $29 a share right now, and in return, they generate earnings of $2 a share. That gives them quite a low PE ratio, in this market anyway, of just 14.3. Also, another nice thing about the stock is they pay a bit of a dividend, an annual yield of 2.5%, which is pretty decent. This is an interesting position for Buffett. As a lot of you know, he's been into banking stocks for a long time now. The price is obviously cheap. However, in these market conditions, the banking business model will be tested, and time will tell if this is a smart investment to hold. This has got to be one of my favorite all-time stocks, and it was actually Buffett who introduced me to it. 8.6% of Berkshire's portfolio is in the company Coca-Cola. In my humble opinion, it's one of the best drinks of all time. Buffett, he owns exactly 400 million shares worth $19.7 billion. That's a lot of money. Again, a pattern that you'll start to notice with a lot of Buffett's main stocks is they operate simple business models. Coca-Cola, you don't have to be Einstein to understand their model. They distribute drinks all around the world and they sell it at various outlets. Some of their billion-dollar brands include Coke, obviously, Fanta, Sprite, Schweppes, Simply Orange, Smart Water, and a range of others. And one of the things that stands out about Coca-Cola stock is their dividend. They pay a dividend yield of 3.1%, and the great thing about this is they've increased it for 58 consecutive years, making it one of the safest dividend-paying stocks. American Express, it's not a bank, but it's a financial services company, quite old, founded in 1850. One of the patterns that you should notice while going through Buffett's stocks is that he loves financial-oriented companies. This particular one, American Express, makes up 6.6% of his portfolio over at Berkshire Hathaway. He owns 151 million shares of them, with a total value of $15.2 billion. Not too much to say on this company. They're obviously known for the charge card, credit card, and traveler's check businesses. The stock has had an interesting couple of years. Up until 2020, they were going great, up over 150% from the start of 2016. And then, of course, we had those rough economic times. The stock got hit hard, but has rebounded relatively nicely. Kraft Heinz, this is another company that has had tough times over the past couple of years. And when I say tough, I mean really tough, as I'll soon show you. So it's a big position, of course, for Buffett. He owns 325.6 million shares worth a total of $9.7 billion. All in all, that's 4.3% of his portfolio. So Kraft Heinz, it's a food company. I'm sure you guys know that. It's actually the third largest food and beverage company in North America with $25 billion in annual sales. You know, if we take a look, they've got some big name brands over here: Watties, Kool-Aid, Jell-O, Philadelphia, Golden Circle. It's no wonder they've sold $25 billion worth of items. However, they have been struggling as a stock. At one point in time, they were selling for over $90 a share, and since then, they've gone down dramatically. And the reason for that is poor earnings, as you can see. They've lacked innovation with their products, and the margins that they've made have not been good, so price is down big. However, you do have some investors saying that this is an opportunity. They pay a really nice dividend right now, they're going for a cheap price, and the business model is fine. So that's up to you to decide if it's a buy or not. Okay, these next two we're going to group together. They're both financial stocks. Not the most interesting to talk about, if I'm honest with you. So Moody's Corporation, that makes up 3.1% of the portfolio, ticker symbol MCO. And US Bank Corp, ticker symbol USB, that makes up 2.1%. So again, with these banking stocks, it's kind of like the double-edged sword. Prices are very cheap relative to other stocks. However, their business model is going to be tested in these tough economic conditions. Risk, reward. That's what investing all comes down to. Okay, coming in at the 8th largest position is Charter Communications stock. Charter is a cable operator and broadband services company in the United States. They provide video, internet, and voice services to approximately 26.2 million residential and business customers. It's a lot of people. The stock, in terms of price, it's up there. It sells for above $650 a share. And it's done really well for Buffett over the past couple of years, going up from $260 in 2018 to the price that it is today. A very nice return. At the moment, it makes up 1.4% of the total portfolio with a position value of $3.3 billion. Okay, two more stocks to go now, guys. DaVita Healthcare, Buffett's 9th largest position. We're starting to get into the very small amounts now. It makes up just 1.4% of Buffett's entire portfolio. Berkshire owns 127 million shares of this stock worth $3.1 billion. I think it's a smart move from Buffett to expose his portfolio to a bit of healthcare. Healthcare is a sector which does better than most in recessions, and it does fine in pretty much all economic conditions. Why? Because people still need healthcare no matter what the economy is doing. The stock has done well for Buffett over the years. He bought it back in 2012, and since then it's gone up a nice 150-ish%. As of right now, the stock sells for just over $100 a share with a reasonable PE ratio of 16.2. Okay, this is the last stock that we're going to go through, and then I'm going to sum up his portfolio. Wells Fargo, you guys know Wells Fargo. They're the bank, fourth largest in the USA actually. Berkshire, they own 127 million shares worth $3 billion, making up 1.3% of the portfolio. As I said before, Buffett owns quite a lot of these financial related stocks. Around 26% of his portfolio is made up of financials, 51% is information technology, and that's mainly Apple. 13% is consumer staples like Coca-Cola and Kraft Heinz, and 4% is consumer discretionary and healthcare stocks. So what I've done here is I've showed you his 10 biggest stock positions. These make up 87% of his entire portfolio. The rest of the stocks owned, the other 13%, are very small positions. Pretty much all of them are under 1%, and these include stocks like General Motors, AbbVie, the pharmaceutical company, Visa, Amazon, the e-commerce company, Snowflake, and a range of others. But the other thing I need to mention is he's got a big cash pile on him as well. Over at Berkshire Hathaway, his investing firm, they have $147 billion of cash on them, just waiting to be deployed. And my opinion is, I think they're waiting for stocks to get cheaper before they deploy that cash and make some big moves in the market. Either way, I think it's such a privilege that we can see into the portfolio of one of the greatest investors of all time, and I hope you enjoyed the video.